Welcome to Consults Over Coffee. I'm Dr. Michael Jones, and this week's topic is the Richmond real estate market. As many of you know, it's a crazy time in real estate. Prices are going up, inventory is down, housing starts are a little slow, building supplies are expensive and in short supply. It's a crazy time. Here to help me make sense of all of this is Matt Jarreau of George Realty Group and Hometown Realty. Matt's a lifelong Richmond resident who's got a great feel for what's happening in the real estate market right now and what we can expect in the future. I think you're going to want to hear this. All right, well, welcome to another Consults Over Coffee. I'm Dr. Michael Jones, and I'm joined by Matt Jarreau, who is of George Realty, which is a subunit of Hometown Realty, right? Did I get that right?
Yes, you got that right.
And anybody who lives in the East End of Richmond or who lives up in Churchill probably knows Matt Jarreau because his name's plastered all over everything up here, man.
We do a little bit of work here and there. I mean, we just try and remain consistent, but yeah. So thanks for the intro. I appreciate that.
No. And you know what I wanted to talk to you about, because clearly if anybody knows what's going on in the real estate market in Richmond, it's you, right?
We have,
and I think, we're looking and there are a lot of really worrisome economic things going on at the moment. The pandemic is tapering off, but isn't gone.
Yeah.
And you look at the economy, something's got to give somewhere, yet the housing market here seems to be going gangbusters.
Yeah.
So what's happening? You can update us on the market here a little bit.
You have a number of different things happening all at the same time. And basically it's an inventory issue. And we've had an inventory issue for many years. And it has just become quite, apparent, I guess, more so apparent probably the past, 12 months or so. And so we were coming into the pandemic, we probably had 2 to 3 months of inventory at any given time, depending on what submarket you're working in, whether that would be, the East End, Churchill, or that would be, maybe like Salisbury and the Bon Air area. So we still had a little bit of shortage of inventory in a regular market. About 4 to 6 months is pretty typical. And going into the pandemic, we probably had 2 to 3 months. So we were a little shy. So we were still having some appreciation, some competition. However, entering into the pandemic, we cut down our inventory to about 30 days. So now all of a sudden, we're definitely short on inventory. Okay. And so that's one thing, that.
So when you say 30 days, does that mean like the number of homes that you typically would sell in a 1 month period?
So basically, yeah, that's exactly what it means. So if you stopped listing houses, right, and you just said, hey, we're going to hold here and all the buyers will still be in the market, in 30 days, there'll be 0 homes for sale.
Okay.
And that's what I mean when I say, 30 days of inventory or 2 months or whatnot.
Okay. So this in some ways sounds like we were just looking at renting a car. And this is the same kind of deal, I think, right? Those guys, they let all their inventory go when the pandemic hit because they figured nobody was going to go anywhere.
Yeah.
So now like renting a car may be the most expensive part of your trip if you can even find one.
I hear it's hard to do.
So I guess similar, not the same thing, but similar market dynamics.
Yeah, supply and demand. I mean, really, what it boils down to is when the supply really is very low and the demand remains constant, the prices go up.
Are there certain segments of the housing market that are more affected, like in terms of you mentioned a little bit about Bon Air and in that area, but certain neighborhoods or certain price points that seem to be faring better or faring worse?
Well, it depends on what your definition of better or worse is. Okay, I would say that if you if you were to call me today and say, Matt, I'm pre-approved for a $250,000 house, and will you help me? The answer would be yes. And I would, in the same very breath and in the same very phone call, I would say, Mike, we're going to be writing, gosh, it's going to be 5, 7, or more offers for you, Mike. So we're going to be falling in love with many homes, and there we'll have to relinquish some appraisal, we'll have to relinquish some inspection, and we're going to have to really give them a really great number. And eventually we'll get the house that you really like, and it'll be a little bit of a process. And if you were a buyer that was in the $350,000 range, I would probably, say the same things and say that you would probably be writing, 3 to 5 offers. And as the price points go up, and this is also very interesting too. Even you would say, gosh, I'm pre-approved for 650 to $1 million. And Mike, I mean, that's also a very tight price range, and you'd be surprised as to how many offers people are writing in that one. That's a very compressed price range as well. There's just not a lot of inventory, that comes up in that sort of price point. So that's also getting compressed,
So it's a great time to sell and a tougher time to buy, it sounds like.
No question. And yeah, no question about that. And if you're looking to do both, I think my advice to people is, gosh, sell your house and try and do your best to, get a rent back, and just kind of understand that you might have to move in with family or rent a place for a while before you really find what you're looking for.
Wow.
Fortunately.
So how long do you see this going? I mean, how long is this going to last?
Well, so coming back to my original comment about inventory. Okay. So we're down to about, 30 days of inventory. All right. And this is what, as this pandemic is setting in. Okay. And now we're introducing individuals from DC, at a higher pace, and Nova at a higher pace. And now we're bringing people in from New York, and we're bringing people, Richmond, Virginia is the 3rd or 4th most moved to city in the United States of America. So we are now accepting population that we didn't accept before. So that further strains, our inventory level. And with these new individuals that are coming, okay, waiving appraisals, or 450 becomes 525, that's no big deal. We just sold a house around the corner from you for 1.2 million, and for Richmond, people saying, wow, that's the highest sale, in Churchill. Sorry, my dog's coming upstairs here. There's ever been. Okay. But when you looked at this gentleman's house, from I believe he was from LA, and what a $900,000 house in LA is compared to 1.2 in Richmond, Virginia, I mean, it is no comparison.
No, exactly. Well, that's when I moved down here from Chicago. I mean, certainly Chicago and LA are not the same real estate market by far, but the trend was the same.
Yeah.
The real estate market is much kinder here.
Yeah.
It was then. So
yeah, it's still
so
relatively.
Do you see that inventory is going to catch back up and prices are going to come down, or what's going to happen with all of this?
I hope so. Okay, I think that would make things a lot more normal for us all. But I think, truthfully speaking, I don't know where it's going to come from. I think that you've got certain segments like new construction, and Moseley, Virginia, kind of southwest Chesterfield, is just off the chain. I mean, but you're waiting 8+ months, from contract to close, maybe more like 10 months. But the problem is that, again, the issue of the inventory is kind of what is pushing some of these new construction markets. So I honestly don't know where, we're going to catch another, month of inventory or more to settle this out anytime soon.
Geez, that's kind of grim. I mean, it's if you're selling, it's fabulous, but if you're buying, it's kind of a grim picture.
It is difficult. I mean, it is very difficult.
Well,
And
so
it's,
the other side then of this is the rental market,
yeah,
condos, apartments, houses. What's that like?
it is basically the same thing. And it is, we just listed our newly built quad building, in North Churchill just yesterday. And I'm flooded, with emails, and I see all this going on, and our management is taking care of this and setting up the appointments and things. But we are flooded with we just inundated with people looking for rentals, and seeming that the market is just, there's a shortage of units, no question. So the issue is there as well.
Wow.
So
There's a lot of buildings, certainly like over in Manchester, and more stuff down in Rockets and all of that. I mean,
yeah,
and Scott's Addition. I mean, there's everywhere you turn around, people are putting up apartments or condos.
yeah.
Is that going to fill in an inventory need at some point, or is just demand so far in front of all of this that it's going to be hard to catch up?
I think it's a situation where it will help. It will help. Okay, lay down, bud. Lay down. It's okay. Well, it
How's
will
he
help
doing?
my.
How's he doing, by the
He's
way?
he's doing better. Okay, lay down. Could you lay down? He's got a something's going on with his hip right now, and so he's got like a limp, back left leg, and I think it's just like a pinched nerve, and he just doesn't want to sit. It's okay, bud. Come on. 1 second. Sorry about that.
No. So yeah.
He's gonna be fine, and he's just, you get restless, and you're moving around, so that's what he's doing. Sorry about that.
I understand. I feel the
But,
same. So,
yeah.
so we're talking about the apartment or the rental inventory. You said that's going to be tough to close that gap as well.
I think we have a lot of supply that's coming. Okay, so we have thousands of units, I would imagine, overall over the Richmond area that are coming. Hundreds in Churchill, hundreds in Scott's Addition, hundreds in Manchester. So I think that's really, that's going to be a temporary home for a lot of people coming to Richmond looking for housing, and that is going to be, something that is that will hold us over for a brief period of time. But again, I remember 10 years ago when they were building the building at 21st and Main, and all the bankers had gotten together, and these guys were Monument Construction, I believe it was. It was 200 something units, and everybody was skeptical about the absorption rate, very skeptical about it. And gosh, I mean, they did 3 phases of that building, and they did the first one kind of all by itself, and they leased it before they even finished the construction. And they just decided to do phase 2 and 3 all the same time. And the building's been completely occupied, ever since. And, no subsidence in vacancy rate. I mean, it's really.
So it sounds like it's an if you build it, they will come.
Pretty much.
Wow.
Pretty much.
What's happening with rental prices? Are they sort of paralleling, home prices, that they're going up as well?
Very much so. And that is, and again, a lot of what we do in the rental is in an urban fabric. So we're talking about the consistency of the immediate surrounding area. But yeah, they're really going up, no question. So I think that it is just again, people are looking for housing. People are willing to sell their house and move into a rental, or they come to Richmond and they say, hey, what's $1,500 a month for a 2-bedroom, or $1,700 a month for a 2-bedroom that's in a great neighborhood. I'll just hang out here for a little while, and while I casually kind of shop the market or get familiar with the space. And
yeah, I get that. It's interesting. I also wonder, and we've talked a little bit about this. as a consequence of kind of the pandemic and the impact on the economy, I mean, there were a lot of folks that were missing mortgage payments, right? Or not
Yeah.
making their mortgage payments, or were out of work. I
Yeah.
mean, what's all that do
I
to
feel
this?
like
Well, I mean, people are going to lose their homes.
I feel like we are going to have some reset here. We're going to see some signs and symptoms, okay, of things have people losing their jobs and being out of work for a period of time. But we have a couple of factors here. This is super important, okay? So one, honestly believe that this is going to be in a sub 250 price point. This is going to be your entry level buyer that is most affected by these things. Your service folks, your
Yeah.
ground floor workers. So I think for the large part, it's probably going to be in Highland Springs or workforce housing like Colonial Heights and things of that nature, that neighborhoods like that will really be affected much more so than in other areas like Churchill, for example. And but at the same time, with the same very breath, Mike, what I'm going to tell you is, so let's just say that you were underwater and you couldn't make your payments. Let's just say, you're at the end of the rope, and your note is, and they're calling, they're knocking the door and sending you the love mail. And let's just say, it's worth $150,000, and gosh, I mean, now it's worth 175 post COVID. I think what you're going to find is you might have some foreclosures, but for the most part, people are going to sell those houses and they're going to turn over. And I think that is going to be an unfortunate reality for the owners of those properties. But if they can break even and get out from under it, why would they damage their credit, or why would they take a hit like that if they can avoid it?
Right. I mean,
That's
it's kind of brutal to have to sell your home.
I lost you there, Mike.
It's kind of brutal. It's kind of brutal to have to sell your home, right? I mean,
Yeah, I mean, and you're still a little
and
you're still a little
frankly,
low.
if you're a renter, you're just kind of on the ropes at that point. I mean, but I get it. I mean, at least you're right. If you have a home, at least you could sell it, and it's a great time to sell.
Yeah, but then where are you going to go? You got to rent a place, and gosh, I mean, you're basically paying the same payment or more, and you're not owning, so
Yeah,
so
that's the thing that's weird. They're things look really good on the seller side of this, but I'm kind of wondering, there clearly are some adverse economic forces at play here too, and I don't know how that's going to impact the market in 6 or 8 months or whatever.
it'll be very interesting. I mean, I think we're all going to live it, and I think at the very beginning, everybody was really on edge. Everybody was really on edge about, just liquidity as a whole and what the banking, industry would do. Um, but I think that the Fed pushed those rates down, and gosh, I mean, it's almost like, you know, money is so cheap right now that people really are borrowing, a good bit, and doing the financing on these projects has not subsided. So speculative construction, whether it be for apartment buildings or mixed use or multifamily or spec homes, hasn't been affected at all.
How have like lumber, because lumber prices, while
Yeah.
improving, became insane.
Yes.
How
Yes.
did how did that factor into all of this?
I mean, I think that some people like that it rode the market up along with the appreciation, and let's transition into new construction areas. I'm just going to make some generalized statements here that may be very accurate for Richmond and maybe not be accurate for other cities. But
Okay.
so where is this going on? Well, this is going on in it's sprawl, right? So we're going to go to a little place called Roseland or Mosley, Virginia, and buy a house in Roundtray or Newmarket. or we're going to go to this new section of Wyndham that's just on the edge of Goochland. Okay, that's right behind Glen Allen, but it's is it Goochland, is it Glen Allen? And all of a sudden, so the fall. This is a true story, Mike. We just closed that house in that neighborhood, and we put that home on the contract. I believe it was in late September of 2020. Okay, late September. So 6 months past COVID, kind of thing. And I think the number was, I want to say the base price was like just under 600,000. Okay, the exact same house, the week of closing, okay, was 660. The exact same home, and people are paying that. And when I want to say when we were there in September, there was something like, I don't know, 30 or 40 lots that were like left in this little section. Well, there's 2 today. That's a significant,
So are you saying that the lumber costs they just pass through
right to the end consumer?
Yeah.
Right to the end consumer. And I think with some of these multifamily projects, and I'm involved in a few, if you've already broken ground and that price is kind of up there, or you've already closed your loan and that price is already up there, it's one of these things like where it's kind of like, you're not going to stall, you're not going to stop the project, to wait and see what happens. Things are already moving. You're committed. You're going to move forward, and you're just going to eat that cost, unfortunately. So there's some of that going on.
Yeah. Okay. Yeah, I see. So like if you're underway, you're more likely to just have to kind of suck it up.
Yeah, and especially
whereas if you're building from the get-go, if you just started today, you just factor those costs in there.
I think it's one of those things where you just say, hey, I've already committed, and we're going to see it through. And unfortunately, I'm going to have to pay a little bit more for these things. And what will save me will be the market appreciation. And maybe I'll break even on this when it's all said and done. Probably make a little bit of money, honestly, with how the appreciation has gone. Or you'll get it back on if it's a multifamily building. You're going to have to upfront the cash because you probably already closed on your loan, and you'll just get it back slowly over time with the increased rent.
So, we were talking about lumber because that's what everybody is aware of, but other building supplies I thought were somewhat in short supply, no pun intended, right?
It's very interesting. It's like, roofing material. Like, it depends on how much you're ordering at a time, but for 15,000 square feet, let's just put it out there that 15,000 square feet of TPO roof takes about 4 months, to get, and you've got all the money in your back pocket. You want to pay the folks, and gosh, if it was today, it would be, in October when you got that, maybe November. Wow. And that's very true. Appliances, are 90 days out. That's a very true statement. You can't get parts for things. So some things that, were coming from China, that you could get parts for, it broke down and you needed a compressor or you needed some sort of circuit board, right?
Yeah.
And you quite literally, you talk to the appliance guy, and they say, just buy a new one, because by the time we can get the part, and the cost of it, $700 for a computer board, for a stove. You can buy a new one for $1,000, and it's brand new versus something that's 4 years old.
So that also kind of affects your ability. We're talking about, low inventory, right?
Yeah.
So it's really going to be hard to, that makes it even harder to close the inventory gap.
Well, what we're doing now, this is very interesting. It's mixed matched, refrigerators. Okay. And I've got a deal right now that's getting ready to close. And the option is we can give you this fridge. It looks different, still works the same. Or we could just give you a check and you can buy something else, and what would you like to do? Because we'd like to close next week at some point. And again, the fridge that was delivered was all dented and messed up, and everybody agreed that shouldn't stay. But getting a new one is literally, I think it's 6 weeks away. So, and they're supposed to move in next weekend. So there's some decisions that need to be made.
Wow.
Yeah.
Holy cow.
Yeah.
Well, hey man, I really appreciate your insights on all of this, because it's a crazy time right now.
It is very interesting, no question. And I think, coming back to what may happen with these foreclosures, we are going to know a lot more come November, December, January. We'll really begin to see what exactly we're up against at that period of time. I don't believe it's going to come, this summer. I don't think it will hit this fall. I think it will lag, into later this year, first part of next year.
Well, I hope it's not too terribly bad.
I agree as
Hey,
well.
Matt, if folks are looking to get a hold of a realtor, how do they track you down?
Well, we can come to GeorgeRVA.com and find us, or get us on our Instagram at GeorgeRVA, or just drive around Churchill and maybe take a name and a number down. But
Plenty of George Realty signs in Churchill.
Here and there, here and there.
Here and there, here and there. Well, hey, man, I really appreciate your taking the time to do this. Always.
Yes, no problem. I appreciate the invite.
Yeah, man. Well, that's another Consults Over Coffee. We'll be back next week.